this. Hey, guess what? We're live.
I'm like,
Let me see if this is a little bit better.
Snapchat.
Hey, everybody. How's it going?
It is.
Let's see. Oh, the light. That's a little bit better, huh?
That's cool.
Yeah. It gives good sound. That's what's important. You like it?
I like it.
All right. Hi, everyone. My name is Teresa Tims. I'm president of TDR Mortgage and Real Estate Group in Upland, California, and I'm here with Manny Soto, managing partner of the Financial Architects. And a hot topic that's recently come up for me and some of the buyers that I've been talking to are people have been withdrawing IRA funds or retirement funds. And I just became aware of this a few weeks ago, and I've been wanting to let everybody know about this topic. And as part of the stimulus due to COVID, the penalty for early withdrawal of retirement funds has been eliminated. And that amount is how much?
It's 10%. By the way, I don't dress like this all the time. I got shorts on. I got my Vans on. I'm totally casual. So normally you guys see me on YouTube or Facebook Live or anything like that. I'm like, I got a shirt and tie in, okay?
Mm-hmm.
So don't let the summer days fool you. So yeah, the 10% penalty has been recently waived. Lots of real estate professionals. I mean, I have clients of mine that are realtors and real estate brokers. I have clients of mine that are in the mortgage industry, title representatives, tax advisors that are clients of mine. At the Financial Architects, we contract about 3-4 different tax advisors. So part of that tax advisory service that they're involved into is specifics about IRAs, when to pull it out, the 70.5 rule that just got pushed out to 72, by the way, 59.5 rule. I mean, you got a mouthful of different laws, regulations. We're under these COVID times, and a lot of you guys right now, not to be energetic or anything like that, but a lot of you guys right now are experiencing something that I call making Christmas from a lot of the chaos right now, which is kind of cool.
Right.
So there's a lot of chaos happening right now, and lots of people are capitalizing on it. And one of the capitalization points is retirement funds. And of course, Teresa, we went to lunch,
Delicious.
like 5-6 of us. And she was like, I got to get you on a video talking about the IRA and this, that, and the other. So automatically, I've known her for a couple of years now. And automatically, I'm thinking to myself, okay, she likes to give people information and keep them in the know. So you have any questions, go for it. Have at it. I'm going to be here for 5 minutes. So shoot the questions.
So when I became aware of this in my head, I was like, oh, you get to just withdraw the money with no penalty. Great. Withdraw the money and buy a house. Like my mind, right? I'm like, if you've been sitting on the sidelines and haven't been able to buy a house because you don't have the money and can't qualify for one of the buyer programs, then what a perfect opportunity. But before I tell people or make a recommendation, I feel that education needs to be there so they can make the decision for themselves. So these are the facts. Early withdrawal of retirement funds are allowed under the new laws. And typically you'd pay a 10% penalty, but now that 10% penalty is waived. However, you do have to pay a 10% state tax. Is that correct?
All right. Well,
it depends.
I'd really like to go back. And by the way, just so everybody understands, I'm not saying at any point in time you should grab money from your IRA and put it into a property. Obviously, Teresa is from that space. She believes in property. She believes in exponential growth of property. I agree with it as well on the growth pattern. There's stocks that are great on the growth pattern. There's properties that have always historically performed very well. There's mutual funds. There's IRAs that are funded by stocks and bonds and mutual funds and things of that nature. So I am not in any way, shape, or form telling you, go take your IRA money and go buy a property with it, okay? But I really believe that it would probably be beneficial for everyone to understand the specifics behind what an IRA is. So for a brief 1 minute, I'm just going to explain that to you, okay? So if I have a job, let's just say I used to have a job 17 years ago, and I got paid W-2. W-2 is you get paid from your gross paycheck. You get all the taxes and things taken out, Social Security, etc., and then it equals a net paycheck. So if I made $4,000 at my job, I would have taken home, let's just say hypothetically, $2,700, $2,600 at the end of the month, hypothetically speaking. So what a 401k or IRA does is they grab money from this portion, the gross portion, so you do not have to pay taxes on that money yet. So what Teresa is saying is that it's eliminating the 10% early withdrawal penalty. Yes, but it's not eliminating the full tax ramifications long term.
That makes it easy to understand.
So later on, let's just say 2-3 years from now, they string out the tax ramifications because of these COVID times. So I'm going to bring you back in a second.
Okay.
So if I put in, hypothetically, I'm putting in $500 a month into my 401k, that's $6,000 a year that I have not paid taxes yet.
Okay.
The government says, Teresa, we love you so much. We're not going to make you pay taxes now. We're going to wait to make you pay taxes because they love you. To give you an analogy,
it's good to be loved.
True. There's a lot of love going on in the marketplace today. So to give you an analogy of what that specifically means is that if I go down to the local liquor store, we just had lunch. So if I go down to the local liquor store down the street and I buy some penny seeds and I plant it in the soil of Upland, Claremont, or wherever we're at right now,
penny seeds,
and we grab these seeds. They're cheap. They plant it in the garden of Upland, and it grows into this multi-million-dollar apple orchard. Would you rather pay taxes on the penny seeds that are cheaper, or the multi-million-dollar apple orchard? Normally, people go with the seeds. So what Teresa is saying is that it may be a viable option for you to take the withdrawal now. Wine and lunch. So we could take the withdrawal now, take the tax hit now, so that you can invest it into another asset long term, and it could exponentially grow. That may make sense for you. I'm not giving you that advice. Teresa's not giving you that advice. She's saying there is that option available to you.
Right.
So one thing to not forget about is if taxes are at 30%, hypothetically speaking, to round it out, and I put in $100,000 and I took out $100,000, you're losing $30,000 from your IRA. So if you have $100,000 in your IRA and you take that $100,000 out and the tax is 30% rounded, you would only net $70,000. So your investment in real estate, in my opinion, would have to get you at least a 30% interest rate. I don't know. Historically speaking, I don't know if real estate's done 30%.
So let's just use that same analogy though, for the purpose of someone that hypothetically did this because they needed housing and they were willing to lose $30,000 so that they could have a home for their family and provide comfort, joy, and security. And for them, it was a worthy loss. So if they did take that $30,000 hit on the taxes, my understanding is that the state tax on that early withdrawal is paid right away. So let's say they took it in July, in 2021, when we do taxes, you're going to take the state hit in 21 and the Fed hit is over 3 years. Is that correct?
That's correct from what I understand. Again, get all your tax advice from your tax advisor. But as a retirement specialist, as a retirement professional, as a retirement coach, if you will, I do get these questions. I get a client that hits me up on Yelp. By the way, we have a Yelp. But I get a client that hits me up on Yelp and they ask, hey, I want to take out my $100,000 from my IRA and I want to put it into a property. I would say, no, my personal opinion. Teresa or other people might have different opinions, and that's okay. Everybody's an advisor at this point in time. Here's my guesstimation. For me, like if I'm a homeowner right now and I'm anticipating on selling my house in the next 2 years, without a doubt, get that thing sold immediately. List your property today, immediately. Call an agent today. You're getting 8, 9 different offers on one property. The properties are actually going up in value because of the lack of inventory. That's what I would be stressing. But if I'm thinking about purchasing a property right now and I want to use IRA money, I'm thinking if I have 100 grand, once I take my 100 grand out of my IRA, that 100 grand cannot capitalize on compound interest.
Okay.
If you're wondering what compound interest is Google it. It's pretty powerful. So if I have 100 grand today and I know that the market goes like this historically, and that 100 grand doubles in the next 7 years, I will have 200 grand in 7 years of retirement assets. If I put my 100 grand and I grab it and I take a 30% penalty, not pay the 10% early withdrawal penalty, but I take my 70 grand, I put it into a property, and real estate dumps in the next 2 years. Hypothetically, just giving you a scenario, I've just put 70 grand into a ditch. That was my retirement.
I think a lot of people, though, a lot of my clients, if they had 100,000, they're not going to be pulling it all. They would probably only pull out like 20 or 30 just so they could get in. And, you know, it's more so for my entry level people that have been looking to do this, or people, Manny, in highly competitive areas. Because right now, you know, you're coming up with, you know, 3.5 or 5% down, and the seller's not paying closing costs. You can't do buyer programs because the market's so competitive, they can't get their offer accepted. So if they don't have their own down payment and closing cost money, they're not in the game at all. So what I'm seeing is my people will have $150,000, $150,000 account, and they're like, you know, I really want to take this out so we can secure a home, and so we can have that. So,
and just so everyone understands this correctly, you know, again, every advisor is different. I can talk to another advisor from Schwab, and he's going to tell you something complete. He would, by the way, blast everybody that even thinks about doing this. By the way, I'm a weird advisor.
You guys. I talked to a financial advisor when the market was tanking. Everybody thinks about taking their money out, me included, because I didn't know like we were going to go to gold and bullion, and like the whole thing was gonna, you know, when everything first started, you just don't know. So your first thought is fear mode, and you want to protect what you have. But anytime you talk to a financial planner, what do you guys say?
They're very conservative.
Yeah.
Across the board, all financial planners are built very conservative. I got tattoos. I mean, I'm the total against the grain kind of guy. We have 13 locations. I have close to 100 different agents in our agency. We've been at this for about 5 years now. I've been in the industry for about 17 years now. I was coached and trained by. I'm old, but the Botox is kicking in, ladies and gents. So I was coached by a pretty strong guy in the arena, and I always go back to being conservative first, because you'd feel horrible losing people's money. In the heyday, 2003 to 2007, when everyone was doing stated loans and getting into these properties, my tax guy was telling me to buy more property. That wasn't the right thing to do at that time, but for tax purposes, they were recommending specific things. Now, having 3 different downturns under my belt, I see what goes on. I understand the market a lot more. And there's just such uncertainty right now in the market. I mean, the government's printing money right now, hand over fist. I had one of my reps get a $20,000 check the other day, and she's never had a $20,000 check inside of her bank account to do an investment. And now it's causing her to think outside of the box. So it's great. It's actually great, the stuff that's going on. The people that are prepared are really making, like I said, chaos into opportunity, and making kind of the uncertainty into certainty when they get into the different investments. But
most of the people,
my point's just be diversified.
Yeah.
But if you want to do that, cool, no sweat. Grab your 401k, grab the 100 grand, put it into a property, and let's rock and roll.
So what I'm doing though is, Manny, I'm just giving them the facts. This is what you can do, and this is what it would look like.
Absolutely.
However, each situation is unique and different, and I am not a tax advisor, and neither is Manny. So we're saying is when you undertake something like this, you know, do it with purpose and do it with knowledge and be educated so that you're making a sound decision. But my opinion as a mortgage and real estate professional is that, you know, if the penalty isn't too great, one of the best ways to create wealth in the United States of America is through real estate. And I'm a creator and an aider of that. And I just want to help people and impart knowledge so that they can make a decision that's good for them. So.
I give a great analogy when I describe doing financial planning in general, just so everyone understands. We just went to a restaurant right now. We went to what's that place called?
Hey, really super fast. What's your phone number?
909-525-0488.
We went to Molly's Super.
Molly's Super. Okay, it was off
Super.
the chain. It raised the roof. It was off the chain. So we're there. We're eating, and guess what we had in front of us? A menu. So waitress comes over. She gives us a paper menu. She's got a mask on. You know, we all got our masks on and stuff. You know, we're COVID friendly, and so we're sitting down. We're having lunch, but I wanted a sandwich. Marlena wanted the salad. Someone else wanted an omelet. Teresa ordered the omelet.
Yeah. I don't like mine.
I didn't either.
Then I got biscuits and gravy. And, well,
actually, that's pretty good.
I should have had that Caesar salad that Marlena had.
That did look strong. So the point that I'm trying to get to is that in life, in financial planning, in financial vehicles, people got property, they got stocks, they got mutual funds, they got cryptocurrency, they got everything, you know. It's up to you to make that informed decision. Our job is just to give you the information and let you run with it. So when I open the menu to a client, I go, I got life insurance, I got retirement planning stuff, I got 401k rollovers, I got buddies of mine that do reverse mortgages. They'll do a 15-year mortgage, they'll do a 30-year. I got realtors that are going to sell your property and look for a property for you. Which one do you want, Bob and Mary? And they get to choose from the menu of options, ladies and gentlemen. That's the point that I'm trying to deliver to you and bring home. Right. Teresa is doing a great job in explaining to you, hey, there's another option on the table. Here's an IRA. You can take the penalty and the hit, etc. Cool. And I'm saying, yeah, you can, up to you. But hey, knowledge is power only when it's applied. So get the information, get the menu of options, and then, of course, use Teresa and myself for that type of stuff.
I'm available. You know, you can reach me. Visit my website, tdrmortgage.com, and you can find me on IG, YouTube under Teresa Tims. Manny, where can people find you?
I have a YouTube under Manny Soto is my personal YouTube, and I do go through some specifics about IRAs and 59.5 rule, an old 70.5 rule now. I do go through basics of life insurance. I also go through economics, basic economic stuff.
I like your YouTube channel or your IG channel. You do have a Tuesday thing. I just kind of want to give you a shout out and let people know about that.
So I have an Instagram. It's Retirement Options. Okay. And I also have a TFA Tuesday that I run through Zoom. It's free information. Last night we talked about tax-free retirement strategies. Real estate was part of the subject, by the way.
So if they were to follow you on IG, they can get information about your Zoom thing on that.
Yeah, or go to my personal Facebook, which is Manuel Soto. You can request me there, and we have a group page. It's called TFA Money Talk Tuesdays.
Oh yeah, that says Money Talk Tuesdays.
We got like 800 people on there. That's or something awesome. Like that. So it's it's
okay.
We're just barely starting to push the wind into the fire, if you will.
Well, you've been doing a really great job during the whole COVID time about keeping people updated, being present. I know a lot of people, when you don't know what to say or you don't know how to support others, sometimes it's easier just to not say anything. Yeah. But you've shown a lot of great leadership during this time, and you've been out there and constantly educating people, and that's what people want. They just want the knowledge to know, how to maneuver the cliche, the crazy times, how to maneuver COVID or whatever. Right. But it's really true. One of the things that rang true, what you're talking about, is the uncertainty. So whereas normally someone that follows data and educates themselves and follows the market, you can kind of predict what's going to happen. But right now, nobody can predict. I'm very uneasy about things. And I would like to reiterate something that Manny said. If you're following people that are giving you advice to hang on to your house and sell it next year, I'm just going to come out and say that's ill advice. And I strongly, strongly, strongly recommend that you get the home sold. And I'm going to be doing a quick live in just a minute with one of my buyer agent extraordinaires, Mr. Clyde Hagan. And we're going to talk about what it means to be a buyer during COVID and how to prepare yourself. So stay tuned. Mwah. I love you guys, and we'll see you soon.
Let's make crisis into Christmas.
Crisis into Christmas. I like it. Okay, I'm going to end the broadcast now. TFA is live.
TFA is live.
Okay, end broadcast. All right.